Hello, this is Alexander Nikolov. Let's take a look at the stock market, US stock market. This is the chart of S&P 500, and the market was very positive this past week after it broke out of the um, resistance level that was established in November. It broke in early December above 1200 level and advanced sharply on the upside. So that's of course quite bullish development. The market is also now above the high that was established, that was achieved in April. So it successfully held then above this level, 1220 level. So the trend, the daily trend on the S&P 500 is clearly on the upside, and it's not only the trend is actually quite strong. So until proven otherwise, which means at least for the bears, they need to see at least a move below 1220 and then below 1200 level. Until that happens, the trend is on the upside, and much larger advance from here is likely to be seen. Going to the weekly chart, we see that the next potential resistance level is around 1257 level, and then comes the 1315 level, the August 2008 top. So overall, the trend is higher on the S&P 500, and the picture is quite bullish right now. What's the wave structure? Well, what we know is that the last move that started from late August is not impulsive, but what exactly it is, we don't know yet firmly. You can see on the website my wave count, current preferred wave count, but of course other possibilities also exist. So from the wave structure, we are entering a period of uncertainty, but for the trending conditions actually support higher prices. So that's why we'll go with the flow as long as it lasts. Let's take a look at Nasdaq. The Nasdaq chart is also quite bullish. Nasdaq has yet to overcome the 2236 level, which is an important level. Actually, this is the high from 2007, late 2007. So it's important for this level to be taken out, for the bulls to have firm control of the market. Right now, the odds are quite high that this will actually happen. And as long as the prices stay above, of course, 2184 and then above 2150 level, the trend is higher, and that's why, again, I can say that one should expect higher prices from here, and probably significantly higher prices from here in a seasonally good period for the stock market. This is the second part of December and early part of January. Again, the wave structure is not exactly clear, but we'll go with the trend as long as it lasts. To find some other clues for the direction of the market, let's take a look at the volatility index. The VIX has declined for the past week or so sharply after it rallied in late November to above 23. It appeared back then that it was going to move substantially higher, but then it quickly reversed, and now is trading with a fresh multi-month lows, at a fresh multi-month lows, still above the lows that were seen in April, which means that further decline in volatility is highly likely to be seen in December and early January, before we can consider a turning point. We can consider a point where the volatility can start rising again. The first resistance level in the VIX index is near 18, but the more important levels are near 20 level. You can see also the clear pattern of lower lows and lower highs. So the trend of volatility is definitely on the downside, which is of course supportive for the US stock market in general. And one ratio that we have been following for quite some time in our video updates. This is the ratio between SPY, this is the S&P 500 ETF, divided to TLT, which is the 20-year Treasury bond ETF. And we noticed and we mentioned several times that when this ratio is moving up, generally that means the stock market is moving higher because there is a preference of stocks compared to bonds. Right now we are in a bullish trend which started in early September once this ratio moved above the 20-week moving average. This is the weekly chart. So we are in a period of an uptrend of this ratio, which also supports higher stock prices and probably lower bond prices, but at least means that the stocks will outperform bonds, will likely outperform bonds, I can say. But until this ratio starts to trend lower, we should give the benefit of the doubt to the buyers on the stock market. Most of the sectors are quite strong. Recently, the financials also joined the uptrend. Home builders, real estate, all these areas are quite strong. Semiconductors remain strong, and some other internet sector, airline sector is also quite strong. Particularly strong right now looks the energy sector. This is the chart of XLE. This is the ETF that tracks the energy sector of S&P 500. And you can see from the chart the clear, very strong uptrend from the late August lows. This ETF has rallied a lot, and it remains firmly during this time. It has remained and still remains above the rising 21-day moving average, which is quite positive here. Only if a move below the 61.5 level is seen, which is the practically a late April top here, only then one can have some questions whether this uptrend is over. But until this is seen, the bulls are fully in control here. So overall, going back to the stock market, to the S&P 500 index, we are bullish, and I expect higher prices in the next several weeks till the end of this year and in early January, and only a move below 1200 level in S&P 500 will cause concerns that the stock market has probably topped out. But until that is seen, the path of least resistance simply remains higher. Thanks for listening. And I'll be talking to you later.